Hey everybody, we have a lot to go over. I do want to go through the basics first. Obviously, the open was the high of the day. Once again, we actually took out the low, and then after taking out that low, we just kind of bounced back. I do think it's important to note that we've been doing this a couple times in this area where we're taking out the low and then rallying, and I don't really like that. It's not really how it's supposed to go. In other words, you really don't have the open and then have selling all day with the open being the high. It just means that it's retail. So it is raising some concerns about what we're saying. If I look at it from this perspective on the SPY, and I do want to go through this one sector that really moved today, because if you understand this, you'll understand the basics on AI and what is the next subsector that is going to move. Really important concept, but I do want to go through this very, very quickly. If we just look at those levels that I marked off, you can see how those levels that we marked just by going from that daily all the way down here now to the 5 and just show you how they're sitting at those levels. I think that's very important to note that you are riding this, but then at the same time, every single time you're getting up here, we're having a problem. Now, you may or may not know that there is a level up here, that call wall that's just sitting up here at 675. And we're not even getting near it. You're getting to that 73 level and you just keep rejecting. But I do think this is important that you are range bound. You keep breaking and then popping back over. And I'm not really sure how this is going to go tomorrow, but I want to be aware of it before we go forward. Also, pay attention to this. So in this, we have the 3, the 5, and the 8. The green is the 3, the 5, and the 8. So this is the 3, the 5, and the 8-day moving average. And I show them on a 15-minute chart so that you can drill into them. And just note, you did close over again. So I want to just preface that. But if you take a look at where you were on Thursday, all during the day, yeah, for the majority of the day, we were under it, but we closed over it. And then you take a look at Wednesday, we were above it all day. So you're really fighting that line right now, and you're starting to get that 3-5 cross in here. We really want to get above this. We don't want to start closing under the 8. And right now, this is not fantastic. I have seen fantastic before, and this isn't what it looks like. You're getting that caution, right? When yellow's on top, that means caution. Red means stop. If I show you it on the cues, I don't have any of that. So this makes me wonder, are we getting out of some of the defensive stuff and rolling into tech? Maybe, but I think that's a stretch. So when we come and take a look here at the cues, we have the green and then we fell down and now we're trying to get a doji, but I don't really like those up here. It's got to flip. It's got to be green, and we couldn't even get over the open. And I do think that's important to note. If I show you this on the 5, you're going to see that we bounced at the exact same time in tech that the article came out on Microsoft. Now, it's not a great article for Microsoft, in my opinion, but it sure as heck is a great article for some of these other names. But if we take a look at Microsoft, to me, and I was in this, but when I saw this, I just don't want to own it anymore. And I'll get into that in another video as to why. You have to really diversify out here and start. You really have to understand why some of these names are going to move and why some of these are going to be a little stagnant. Really going to be important going forward. As always, subscribe to the channel, click all notifications. What we go over here is really timely. And if you find value in this, please share it, whether it's on social media with your friends. You'd be surprised how much noise there is out there. All right, let's get to it. One of the most critical pieces of information came today in a Bloomberg article of all things. And I want to go through this because it really hammers home the point. Microsoft forecasts show data center crunch for persisting into 2026. Now, first, why would they come out and say this? Because you're going into earnings season. And they're not going to come out and absolutely crush probably if they're saying this, because what they're trying to allude to is it's not us. It's the fact that we have this huge data center crunch. But we're going to talk about the companies that benefit from this. You should have seen some of those move today, but they even mentioned some in the articles. And I want to point them out because there's probably names that you're familiar with and maybe some that you're not. But those are very well done. Data center crunch will continue for longer than the company thought. U.S. data center regions are experiencing shortage of physical space or servers. Super important, so I'm going to read it again. U.S. data center regions are experiencing shortage of physical space or servers. So we should probably take a look at the companies that do this either on the cloud, or we should look at the companies that have the physical space that might be able to convert their physical space into a data center. And we're going to go through a couple of those names. Specifically, they even get into the areas, Northern Virginia and Texas. New subscriptions for Azure cloud services are restricting in some crucial service farm hubs, including Northern Virginia and Texas. I wonder who's got any types of data centers in those areas for the first half of next year. Anonymity to discuss. The longer time frame, company said, July, current constraints could continue through the end of 2025. Now it's the end of 2026. So they keep pushing it out, meaning that they don't have anywhere near what they need because demand keeps increasing. This is actually a great thing for certain companies, and it's telling you that this is going to go on longer. And it usually always goes on longer, but it always takes longer for it to kick in, if that makes sense. The lack of capacity affects machine running graphics processing units used for artificial intelligence, as well as data center dominated by central processing units that have long been the workhorse chips for traditional cloud services. Okay. Most important growth engine, $75 billion during 2025 fiscal year. Its expansion is outpaced by biggest rival Amazon and Alphabet. Lack of servers to rent out to customers has been recurring concern for cloud providers in recent years. Lack of servers to rent out. During the last 6 quarters of earnings, Microsoft said it was unable to meet all of its demand. Amazon, Google, all of its demand. So what do they need? They need data centers. Okay. Microsoft focuses the majority of Azure services regions have available capacity. Existing customers, deployed workloads can continue to grow. In some cases, unplanned demand spikes will introduce capacity preservation methods, whatever that is. But take a look at this. So here is cloud growth outpaces rivals in AI. And we could see down here it started to slow and everyone was like, oh boy, this isn't good. And we remember that with cloud. We saw that with Google Cloud, and it came down in October, and everyone was like, oh boy, here we go. And it's not going to be as great. It's going to be the end of the world, all of that. And then they started kicking up again. Now you're seeing Amazon start flattening out, and you're seeing Google and Microsoft start to lead. This is going to be really interesting because Amazon just embedded Anthropic. So that should be interesting to see what that does next quarter. But here's where we're going with this. Azure customers selected data center regions on physical proximity and what software is available. Customers select data regions based on physical proximity and what software is available. When a preferred facility lacks space, salespeople point customers towards others with capacity internal guidance, but these workarounds can increase complexity of the amount of time to travel between server farm and the customer. This is really interesting because the time it takes to travel between server farm is what AVGO does. It cuts down on the travel time between server farm. In some cases, customers experience Azure capacity issues, take their business elsewhere. I've had it. I'm going somewhere else. I'm not going to butcher that name. Who helps companies set up clouds, workloads, cloud Hexaware, tap multiple Azure regions, send critical workloads to cloud, more capacity is available. So they're bonking them around, and then people are going to get annoyed by that. Large customers plan demand spikes, holiday periods, guide them the most appropriate regions. Again, that is AVGO. Unusual cases, customers faced increased costs. Microsoft will compensate them for additional expense. How interesting is that? Microsoft has been a historic building spree of data centers. We know this. It's been almost impossible to build capacity fast enough since GPT 4 launched. Try GPT-5. It's a disaster. CTO, OpenAI, blah, blah, blah. Even our most ambitious forecasts are just turning out to be insufficient on a regular basis. So this is telling us 2 things. 1, they don't have anywhere near what they need. 2, they can't meet capacity, and that's going to come out in the quarter, in the earnings quarter. So they're going to say, we missed, or they gave this number, but it's not as great. We didn't grow as fast because we don't have the demand. Or we have the demand, but we don't have the product. And this gets you into, quote, neo clouds like NBIS. We'll start there. AI's intense computing demands have fueled much of the need for new data centers. Microsoft also faces crunch demands. Cloud underpins applications. CPU workloads, OpenAI, Microsoft's largest customers, according to people familiar with the company. All right, here we go. This is where it gets super interesting. Microsoft also uses significant power for itself. Some employees have been told to close your internal projects on impacting regions to save capacity. So you're at the spot where it's more productive for them to shut down their own business and sell the service. So why is this important? Because the other day we saw this number come out of Oracle, and this number was Oracle's not making any money during this. You have $10 billion worth of product, and they're making $100 million off of it. Well, if that's truly the case, you think Microsoft's telling their employees not to work so that they can sell the capacity? Probably not, right? All right, so we'll take that article with a grain of salt, and we'll get to that. It takes years to bring a data center online. So if you already had a physical location of a data center, that might be a good thing. Several crucial components for data centers ranging from conductors to electricity and we know we need more power. Exceptions can be made for customers. People familiar availability is better outside the US, but we're dealing with this. During the earnings call, the chief said, I talked about, but my gosh, in January, I said we thought we'd be better in supply by June. In July, now I'm saying I hope we're better in shape by December. And here we are going into December, and what are they saying? What does this mean? It means that this demand's insatiable and is significantly greater than anyone expected. And it affected a very small group of stocks today. Let's get to it. Now, for time's sake, we won't go through all of them, but I do think there's some here that are very important. And to start, NBIS. So what they do is exactly what they said in that article. They basically the cloud. And so what Microsoft would do would be to buy their capacity. This is a name we've been playing around since the 30s, but today we actually did another swing trade on it, and I'll show you this. And you can actually see where I put it out there live. And the reason to put it out there was relatively simple. There was a setup here, a technical setup, but you could see the volume starting to come in on that, and that's us buying at 125, and it just shows everything through the timestamps. But here we are. So if we go and take a look at this on a 5-minute chart, it's really hard to miss, but you're seeing this a lot. You're seeing these undercuts a lot in the morning. And now they're doing these undercuts and then they're ripping you straight up. So as soon as we saw that, we're like, okay, how are we over the previous close? Here's the previous close. And you could see this really clearly when you looked yesterday at that doji. So once you got up over the top of that doji, it was pretty much on. So from that level, what we do is we just mark the top of this. Remember, it's all about the stool, right? So when we're always looking at the market, we're looking at the current environment, and that's the macro. And then after the macro, we look at the fundamentals. So because what's the macro going to tell us? The macro is always going to tell us, what is going on. Then the fundamentals are always going to tell us who's affected by it. And then the technicals tell us when. And sometimes you're leaning on certain parts of this. Other times you're not leaning on, the whole thing, but you're leaning like on the back leg. It's just technical because none of the other stuff makes any sense, right? And then obviously the shorter your time frame, the more you're leaning on the back leg, as always. No longer your time frame, the more you're leaning on the front leg. But that's how to think about it. Remember what, who, when, and this is going to be macro, fundamental, and technical. So we knew that this was going to have a demand, but the technicals needed to sit. And so when the technicals finally sit, it presented an opportunity, and we took that opportunity, and it was fruitful, obviously. And I think this is important because you're seeing some of these names rally, retest those levels. You can see how it retested the top of that doji, and then it just ripped. And you really started ripping as soon as this article came out because people got it. You're going to have to use products like this in order to meet demand. And NBIS is one of those companies. This was another one that we've been going on over for some time and walked you guys through or walked the community through a long time ago. We've been playing with it forever, but this earnings solidified everything. We bought after this earnings call, and it was very clear. And then in here, they came out and said, hey, by the way, we're tripling demand. Now, you remember from that Microsoft, that piece that we just went over, and you can go back to it. Well, who has data center capacity in Texas right now that they're selling? IREN has facilities in Texas. What are they doing? They're converting over to put the Blackwell in there to sell the capacity. That's what they're doing right now. I wonder when someone just comes out and starts taking over the companies. That's what's so fascinating to me, and we haven't seen it yet. Like, why would Microsoft deal with this? Why not just buy the company? It seems like it'd be so much easier to take or at least take a strategic investment in the company. It doesn't seem to make a lot of sense at the end of the day. You would think they would have. It just would have been cheaper for them at this point, probably. And this thing about the amount of time they would have saved. So as long as this goes on, you're going to continue to see this kind of thing move a little bit higher. And then again, you just flipped into the end of the day. So if you look at when this article comes out, it's pretty obvious what happened. You have your big drop, and then everyone's like, oh, I got to get out. And they've been doing a lot of this lately. They've been doing a lot of games lately in this market where they're just cracking these things to shake the tree. And then you just see they literally, if you watch this, and they did this with Oracle the other day too, they literally step away from everything in here. They just step away from all the bids, let it completely implode. Everybody wonders what's wrong. And then they come right back in and they take it to highs. And it allows them, like, look at the volume after this nonsense. Like literally after that nonsense, all the volume dries up and then it goes away and then it just rips for the rest of the day, right? This is the exact same nonsense where we're on speaking of nonsense that we saw the other day. And I actually put out an article on this or a video on this because this did make me go, I wonder what's going on. Now at the time, I didn't have the ability to do all the research from when I put the first video out, but you see how we crack and then that's it. And this was Oracle doesn't make any money on their data centers. And so we were down for that information article. And then all of a sudden, look at where you were at 270. And then look at all the buying that just happens to come in right after they crack it. Now, where were all those buyers over here? They didn't want it up there. They wanted it down here. And so look how much buying you got that whole time. And now look at this chart. It's absolutely crazy. But if you don't think that the market's manipulated, here you go. Remember, you're playing against the smartest, most disciplined people in the world. That's why I tell people to act like it. And they absolutely cracked it here, and they cracked a bunch of people. We were fortunate enough to go short there, but the article did make you wonder, because you have to look at this stuff and take it on face value and then go back and do the work. But on a smaller scale, it's very clear that that's what they did today as well. It is very clear they just stepped away from it, let it fall apart, rallied down. And this is the month to do it because of the blackout period. There's no buyouts or corporate buybacks, because a lot of these companies are coming out with earnings. So we see this with IREN. We watch IREN absolutely collapse. And then by the end of the day, what's it doing? Closing at an all-time high. And I think that's very important to point out. I do. So now you got an all-time high close going on here after the capacity constraint issues that we were just talking about. If we go forward and look at some of these other names like Wolf, look at this breaking out. Why is it breaking out now? Well, you broke out, you came back, retested, but look at the time when this started to rally. They all started to rally right around the same exact time. They cracked them all around the same time, and then miraculously they found buyers right after that. And it's not just that, but there was this APLD, and this is, I don't trade all of these. This was one that had earnings that I don't trade, but you can see how this is, doing the same exact thing, the CIFR. And this just had a secondary, but you could see it cracking right around the same time and then lifting. See, the reason that IREN was so interesting to me, and it boils down to fundamentals, if you knew who had the majority of space in Texas that they were leasing and also had the demand of energy, like had their energy demand under control, it's IREN that's in that area. So it makes it a much more lucrative candidate. And we've seen that. But you're also seeing the buying of NBIS. I don't see how this is going to stop. What I would say is I think it's the hyperscalers that are going to have a problem this earnings cycle. I think they're going to be good personally, but I don't think they're going to be great. I think it's going to be the people that have the excess capacity that are going to do better. And that's really where I'm going to focus. As far as other names that are out there, I think it's super interesting how they keep whacking AMD around. You rally one day, the next day, it's just dead. It makes a new high, and then they just suck the air out of it. Same thing with Micron, very similar, where they're rallying you up, taking out new highs, and then flattening out. A lot of the volatility in here is, it's pretty interesting how they're doing it. So semis to me make me wonder if I want to rush into anything. And the answer is no. I want to see how we act tomorrow on the OpEx and go from there. That is it.